My message to all climate tech founders out there today is, if you ask for green premium, go home. We were probably the most wrong in terms of our investment thesis on the acceleration or the growth of the voluntary carbon markets. 2022, there have also been quite some, let me call it, tourist investors or tourist LPs. People are just following trends and they are gone. We are quite satisfied with the outcomes that we were trying to achieve. Our seed strategies around 30% gross IRR, 1.3, 1.4x, 2.5 years. These are market rate returns.
I'm Hugo Roche. I'm an early-stage climate tech investor at Climate Club, and this is New Wave with Fabian Heilemann, general partner at AENU. Before we start, I'd like to say thank you to EXA for having us in their studio, and reach out to Maxime Bruce if you want to learn more about their carbon acceleration program. Fabian, welcome to the show.
My pleasure, Hugo.
You started AENU in 2022. Money was cheap. Climate tech was sexy, was the hottest sector out there. Everybody wanted to invest. What has changed since then?
Everything has changed. And when 2022 was an area where political tailwinds for climate founders were a given, and many corporate CEOs and institutional capital allocators, but also the consumers globally, like out there, it was becoming mainstream to act more climate conscious and to have decarbonization agendas, net zero goals, etc. And that has basically turned around 180 degrees. And my message to all climate tech founders out there today is, if you ask for green premium, go home. You can go home on the spot. It's over. And if you want to succeed today in making outsized impact while building a commercially successful business, it is all about designing your product and your unit economics for price parity and for feature parity compared to the legacy polluting products that you are trying to replace.
Is there any assumption that has completely changed that maybe you got wrong in 2022 that doesn't hold true today apart from the green premium?
We were probably the most wrong in terms of our investment thesis on the acceleration or the growth of the voluntary carbon markets, which effectively have stalled and went kind of up and down in the single-digit billion euro market size range on an annual basis for the past 3 to 4 years, where 4 years ago, everyone was assuming this market would basically go through the roof and it would basically penetrate the mainstream of our economies to a much higher degree. And also that, of course, we had to reflect in our investment strategy. And today, new investments in carbon economy, so carbon marketplaces, carbon accounting, also on the carbon removal, DAC, engineered solutions, etc. We do much less than that. But we do, for example, more today on the climate adaptation and systemic resilience space, because this is where it is easier to find price parity, feature parity, and tangible commercial ROIs usually for the enterprise buyers. I mean, like 90% of what we do at AENU is B2B. Yeah. And so with all, good intentions and let's say value-driven approaches, we need to adapt to the reality in the market.
And don't you think that we've got a bit dreamy about the fact that, for example, the carbon removal market will grow just voluntarily out of just a pure willingness from big corporate to buy those carbon credits and try and remove carbon out of the atmosphere? Like, was it not a dream?
Well, in hindsight, it's easy to say it was too good to be true or it was a dream. However, at the time when we let's say tried to feel back into the market and political environment of 2019, 2020, 2021, thinking more long-term about society, about planet, about also the climate crisis, even the impeding biodiversity collapse, became more and more mainstream. And younger generations took it very much front and center. And green parties across Europe and also across the world gained in popularity. And I mean, I remember there were times when people in Berlin were actually thinking Annalena Baerbock at the time, leader of the Green Party, would be the next chancellor in a country like Germany. Yeah? Ultimately, it did not happen. The Green parties made severe mistakes in positioning. We got the Gilets jaunes in France. We got similar, like right-wing populist movements in Germany and in other countries, because the Green parties fundamentally failed to build programs that would really, in a positive way,
Mm.
with a positive narrative, also catch and hook the mainstream of the population, and would not be um, primarily accusational, and would not be about extra costs that would be added by carbon taxes and whatnot. This was the mistakes that the green movement has made, and so it lost steam. And then the Trump administration came into power a second time, and that ultimately spun things into a very different direction. Or when you think of it in an image, the pendulum swung from one extreme to the other extreme, and that's where we are right now, 2026. I believe it's not going to stay there, yeah, to the nature of the pendulum. Yeah. But right now it is what it is. However, of course, in stark contrast to this changing macro and political environment of the past 2 to 3 years, with the anti-ESG, anti-DEI backlashes, the underlying problem, when you think of the physics of the climate crisis, the weather extremes, the droughts, the floods, all the damage that's been caused in LA, in Sevilla, elsewhere, is only increasing as we speak, and year after year, and we pass through 1.5 degrees now. That is gone, and we are talking about leveling off somewhere between hopefully closer to 2, and not closer to 3 or 3.5 degrees. So the fundamental underlying problem and the crisis that is also threatening the wealth that we have built in the Western world, but even globally, has not gone away. Um, Leaders and mainstream has just decided to talk about it less and to deny on it, and to take more of a short-termist
Mhm.
approach, thinking of what is my bonus this year, what are my quarterly results that I'm posting in my analyst report as a listed company and stock exchange this quarter. The short-term thinking has come back. The long-term thinking is being suppressed right now. But again, this is not solving the underlying issue.
Yeah, I think we're still a little bit lucky that some of the trends are in our favor as climate investors. When we think about the energy needs that that is just basically growing and growing due to AI and other stuff and
Right.
electrification of the industry, I think that is playing in our favor. But look, you know, as I said, I'm an investor at Climate Club. I'm very new to this world. You know, I'm a student of this business. What should I learn from you? What is a 2026 playbook to invest in climate tech? And do we still call it climate tech, by the way?
Yeah, I think, amongst us, and amongst those who come from a mission-driven perspective, it is fair to still call it climate tech. However, also, in all honesty, speaking to the mainstream stakeholders out there, also speaking to the limited partner
Hmm.
market as a GP, as an institutional VC, the word climate and carbon, etc., decarbonization, all of these words have become a burden. And it is sad because, again, the underlying problem is anything but solved. Um, but the market is right now not able, or not willing, so to say, to continue to face these realities and to act upon it. Therefore, what you've seen, or what we've jointly witnessed in the market, is a lot of, let's say, reframing, and not talking about climate per se, but talking about energy efficiency in industry, talking about energy transition, energy resilience in the wake of the geopolitical tensions, the uncertainty in Europe. Also, as you say, the mega trend of AI infrastructure build out is raising energy demands, and the let's say the ability to win US versus China in the AI race, where Europe unfortunately is in a lost position right now, at least on the infra and big labs. I think on the application level we are not doing so bad. Yeah? All of this is geared towards energy security, energy availability, etc. So per se, in 2026, everything centered around energy transition, energy resilience is absolutely working well out there in the market, not just in terms of um, entrepreneurs, experienced, strong entrepreneurs coming to the market, founding in these areas, but also up rounds and A and B rounds, C rounds. So this is fully intact. And I would argue the same for everything around industrial efficiency, manufacturing 2.0, also a huge application field for agentic use cases, predictive maintenance, and so on. Yeah. Where usually climate benefits in terms of energy savings, material savings, scrap rates going down, etc., are intertwined or even interlocked with the models.
Yeah.
It's just a different way of positioning it these days. If you want to make it work seamless and if you want to be palpable to a broader audience. Yeah. Um, Another sector or another theme that we believe will be very interesting for founders and investors alike in the next couple of years is the area of climate adaptation, or if you put it bigger, even systemic resilience, which means not thinking about how can we reduce incremental emissions or decarbonize existing molecules from the atmosphere, but this is more about accepting, okay, we're in a 1.2 degree world today, we'll be in a 2 degree world in probably 10 to 20 years already, and so on and so forth. And how do we cope with the effects of the global warming as it happens. And that means weather extremes, droughts, floods. How do I protect my assets? How does insurance and reinsurance work under these new paradigms? How does weather modeling 2.0 work? How can we, harness high resolution satellite imagery to make geospatial data also accessible for large language models, and so on. There's so many aspects to it, hardware in the physical world, but also software-led models, and that's a really exciting space. I can only, let's say, point every founder towards to think about it. And it's also exciting because it strikes a chord again with the mainstream market. Because no matter if people are right-wing populist or left-wing or green or whatnot, they all understand we have built a certain, let's say, wealth and comfort in the developed world, usually measured by GDP and GDP per capita, etc. And the climate crisis is actually threatening this wealth and this comfort of living. And that's the common denominator. Again, when I was speaking about the Green parties that kind of missed to strike the chord with the broad population, that's the common denominator. Like everyone out there has an interest that their home remains insurable.
Is it not going back to, and I like that statement from our friend Tim at World Fund that says that you invest in companies that can sell to climate deniers. If we think about adaptation, can those companies sell to climate deniers?
They can, whenever there is a clear, visible commercial ROI for the client that can be positioned as the primary decision-making rationale to buy the product. Yeah. So when that is the case, you're in safe territory, and the intertwined or the interlocked climate benefits with that often are seen as a surplus, as a nice to have by some, and by others, maybe they are agnostic, they are neutral, but it's not impeding your growth. It's not impeding your success. However, if you go back to the 2022 mindset and you say the key decision-making rationale why you should buy this product is because you want to think of your grandchildren, in which world will they be living, and how does this all pan out, and will we still have polar bears and whatnot, then unfortunately, again, you can go home, because then you're talking to 2% of the population where you should be talking to 80% of the population or the respective corporate decision makers, no matter who is your client. This does not work right now. However, I think if we sit here in 5 to 10 years, the pendulum swinging left, right, and ultimately again back, yeah, in its nature, I believe there will be a second wave of accepting a more long-termist approach and of realizing that just denying the climate crisis and its implications, then also at some point biodiversity collapse, etc., blue economy, denying the whole set, so to say, of environmental challenges that humanity has built with its own behavior in the way 200 years of financial capitalism have been very extracting and burning resources. I mean, this has all been man-made. So there will be a second wave of accepting that, maybe in a less politically charged or
Mm.
extreme way. And I believe it will come back into the mainstream. But right now, it is not. And as entrepreneurs and investors, we have to face the reality of the market and adapt to it in a smart way.
You were talking about the energy transition just before. Um, something that's on my mind, and I think in the mind of a lot of VCs right now, is um, China has the best EVs, they have the best batteries, they have the best solar panels. Like they have the full production chain, they have copper, rare earth materials. What's left for us in Europe?
Yeah, that is a good and also daunting question indeed. And I think, well, when we look top down at the last 10, 15 years in tech, we have lost social media, a lot of commerce, search, etc., for good to the US, to the Silicon Valley mostly. And we have lost, or even, let's say, actively pushed everything that is hardware, real world, physical world manufacturing into greater China and Southeast Asia. And it was even Europe's agenda to offshore the manufacturing there and harvest profits from geo arbitrage on wage or difference or on different labor costs. And it has, rightfully so, it has led to China and other countries build clusters of excellence in these areas with huge economies of scale and ecosystems like Shenzhen, which do not exist in a similar way in Europe and are hard to replicate overnight or even with a lot of political willpower and budget, because it has organically grown over decades there. And Europe's role, also when I think of, let's say, the paradigm shift to the AI age, is not to try to replicate where China is good at. For example, saying, "Oh, we try to insource or to nearshore the production of PV panels again to Europe." I think that is a hopeless attempt. Yeah, but it is more about recognizing the strengths that we have. And Europe has always been an innovation driver in precision, etc. In automotive, we're strong in pharma, certain bioscience, chemicals, and so on. Generally, also, let's say the more complex, sophisticated manufacturing, there are strong clusters across Europe. And it is really about thinking, okay, where are we still amongst the best or the best in the world? What is our core DNA and how can we build agentic solutions and data-driven products on top of that? Also in defense, by the way, I do believe Europe has quite a chance to build some of those next generational companies in defense, where you can smartly transform the huge amount of precision manufacturing and large scale line production know-how, for example, from the European automotive industry, and apply it to defense. Yeah.
Yeah.
And where many companies are now approaching this leap between prototyping a small batch and producing 10 or 50 of these drones is one thing, but then producing 10,000 of these drones per year is a completely different game where, so to say, the new world can learn from the old world. And that is how I think, let's say, about the opportunities for Europe um, in between China and US. And absolutely paramount for that is basically a strong will on a political level, and that means also on a societal level for further unification on European level. And we have the euro currency. Yes, we have some, let's say, some trade barriers and customs and whatnot. But on a military level, also on bond level or on financing level, and other areas, there is still too much fragmentation, and that means it is still much harder for a European entrepreneur out of Paris, out of Stockholm, out of Munich to address those 300 million plus people in the EU 28. And it is much easier for a US entrepreneur to address this home market in a unified way. And this is also still the reason why we see decacorn companies built out of the US, catering only to the US, yeah, and then listed on the Nasdaq, and of course, functioning capital markets, functioning stock exchanges, especially also for fast growth, but only slightly profitable tech companies, is another big issue in Europe. We have many stock exchanges, but all of them, in and of itself, do not have the critical mass to really absorb the best of our companies, the best of breed. And so we lose many of them eyeing the Nasdaq instead. Yeah, it's a deeper capital market. Also, the valuations that are paid at same business model, the valuation multiples on sales, on EBIT are higher there. This is another big ecosystem issue to solve for European policy. And when I look at the past decades, I think there was a strong tendency from European leaders to retain power and decision-making ability on a national level. And if we don't give that up, then persisting in the, let's say, in between China and the US will be extremely hard. And I believe with the current generation of politicians, it's not going to happen because it also has not really happened in the last decade or two. So my hope is that the generation of those people, I mean, I'm 43 now, am I young, am I old, or somewhere in between? But my hope is that the generation, which is now the zillennial types between 20 and 30, that they grow up with a completely, let's say, I'm a European citizen mindset and not I'm French or German or Italian anymore, and that we can hopefully achieve a breakthrough. But my gut feeling is that it probably first needs this generational shift, and maybe also first a kind of a hitting bottom moment where Europe really, needs to accept we are in a deep structural crisis. This is not about incrementally improving a bit here and there and shifting a bit of budget from A to B and left to right. Yeah, but we are challenged by the US and China and in a deep structural crisis, and only the acceptance of this existential threat will then hopefully unleash the willingness to really take a United States of Europe approach, which is the only way forward I see, honestly.
Yeah, I can feel your passion for the topic, obviously. Um, you talked about defense. It is obviously a big topic right now for a lot of VCs. Uh, is AENU going to invest in defense?
No. We are holding course and sticking with energy transition, with industrial efficiency, also with climate adaptation / systemic resilience. These are the areas where we are proficient, where we believe we can prove that we are a value additive investor. There are here and there maybe some dual use type of cases. For example, Beagle out of Hamburg, a drone-based company from our portfolio, whose systems are used for surveillance of critical energy infrastructure. Can be, you can see that as a dual use, but we are not native defense investors. There are other investors who are much more proficient and specialized on that. And in that regard, I think successful investing is also always about, finding your niche in the market and having an edge there, and then also sticking to it, not trying to chase the flavor of the month and to go too broad.
Look, you're currently, I don't know if it's public or not. Hopefully, we can talk about it. But you're currently on your way for Fund 2. Um, what is the discussion like with LPs? Like, has it changed since 2022, the way they react to your thesis, or do you feel that the market's still the same from the LP perspective?
It has changed, and those LPs that are still investing, or that have been and are still investing with conviction on the thematic field, which is always also intertwined with the question around carbon savings, impact reporting, etc. They are still around and they continue with conviction. But in 2022, there have also been quite some, let me call it tourist investors or tourist LPs, both on the LP level but also on the GP level. People are just following trends, and they are gone. Yeah, because right now the flavor of the month is AI, obviously, and its defense. Yeah, and that's let's say it's the nature of humanity, if you will. Yeah, the markets, the people, also the investment community is following trends, and our job is basically to showcase also on financial performance next to impact performance, to showcase that there is an attractive market segment that we are pursuing, regardless of whether it's Biden or Trump, or you know regardless of the macro, and that is ultimately measured in financial KPIs. And in that regard, we can say that we are, especially in the last 2.5 years, really doubling down on seed stage investing in these three areas. We are quite satisfied with the outcomes that we were trying to achieve. We have our seed strategies around 30% gross IRR, 1.3, 1.4x, 2.5 years. So these are market rate returns, and this is exactly what we need to show as an impact-minded investor, because the scrutiny, of course, of mainstream LP market is what you are doing. We understand, okay, we hear you, but does this mean we need to sacrifice returns? So we are always under pressure to show there is actually market rates returns to be made in these areas, interlocked with, in this case,
Hmm.
climate impact. For others, it may be educational or health or whatnot. And so far, again, we are getting there, and we are also getting positive feedback from the LP market now approaching the second fund generation, that they see that we found our niche, we strike a chord there, exactly with these paradigms of seeking products that can show price parity, that can show feature parity, that have a visible commercial ROI for the customers, interlocked with sustainability benefits. That is basically the formula that works for us, and that the LP market also rewards or recognizes.
Yeah, and I think when I think about the VC game that we're all playing, I think the ultimate metric is your return, right? Like no matter what is your thesis, you can talk, you can call it impact, you can call it climate tech, whatever that is. As long as you have returns, LPs are quite
Will
happy.
will will bang your door, and the other way around. Exactly. Yeah.
Uh,
That's the nature. That's the nature. I mean, on a macro level, we live in capitalism, and therefore the financial returns are a paradigm. Let's say that you cannot break unless you merge into NGO, into nonprofit, which is a completely different
yeah.
sector measured by different standards. But we are part of financial capitalism, and therefore these, let's say, North Star metrics that follow from that can never be ignored.
And you were talking obviously about some of your multiples so far, but where are you seeing the exit landscape for these companies? Because in energy, for example, like I haven't seen that many in Europe. Top of mind, I'm thinking about the biggest one, which is Kraken in the UK.
Kraken,
But apart from
Octopus,
that, yeah, apart from that, are there any other what's a pathway to exiting these companies or to selling these companies?
generally, when thinking of VC exit pathways, of course, let's say the IPO is always the king's way. It's what
Hmm.
every entrepreneur, every VC dreams of, but it's very rare,
Yeah.
especially in Europe, statistically. And from my point of view, yes, there have been, of course, the area of spec, the era of spec IPOs, and there's micro cap IPOs. But from my point of view, only from a market cap north of, let's say, 1.5, 2 billion is where it starts making sense in terms of liquidity and your ability to secure like brand name cornerstone investors from the institutional public equity market in your cap table. If you cannot get there, the trade sale is always the better option. And the trade sale can be to the financial investor, gross equity, PE, etc., can be to the strategic acquirer. And I believe we will see 95% or 90% maybe of the noticeable exits from our themes in the trade sale bucket. There are exceptions, and as you say, Octopus Energy will probably list. Maybe Kraken even standalone. We will see. Maybe NPAL, 1,5. We are now probably in the next weeks we will see a Fervo listing on geothermal energy in the US. Yeah. So there are many exceptions to the rule, but the default is rather the trade sale. And and I think a bucket that is interesting to observe is a bit deviating, let's say, from the standard classical software pure play VC playbook, is basically what I like to call kind of green infra 2.0. Yeah. So a new breed of usually hardware, a product on the hardware side, maybe with software components, but certainly hardware at the core. Hardware companies, often in energy, but sometimes also in the industrial, that are often associated to the electrification of everything.
Mm-hmm.
Good case in point is Léa Dardenne, Bastien Auguery here with ePire from Paris, France. We led the pre-seed round on electrifying industrial heat. So the steam and the hot air that is needed in industrial production processes anywhere, say, between 100 and 800 degrees centigrade. What used to be delivered with gas boilers, burning fossil fuels every minute, and electrifying that in a way where, again, price parity, feature parity is achieved. You're connected to the grid, to the energy market. You can play a bit of energy arbitrage throughout the days, benefit from intraday energy price shifts. Like these type of companies, um, I think are still, let's say, underrated or a bit overlooked. And we see also outside the traditional VC world, we see many of the large, Brookfield, Macquarie,
Mm-hmm.
Allianz Infra, and so on. See many infrastructure players that are now starting to eye these type of, let's say, green infra 2.0. Yeah,
Mm-hmm.
what is basically the next PV, photovoltaic, the next wind power type of technologies for large scale international and global rollouts. So this is, let's say, this is an additional road that has not been paved so much for VC funded companies in the past decades, but with with a new wave of green infra 2.0 companies, this is something to watch.
Yeah, that's actually quite interesting because it goes back to the root of VC, which is like we finance innovation and then infra funds take it and deploy it at scale, right? Which is all, I guess, which is the way it has been before and should be. Um, look, before finishing this episode, there are a couple of aspects that I want to explore.
Yes,
The first one is you talked about being a value additive investor. It is for me. It's hilarious because every VC says they add
everyone.
value, right? And I've been an investor for only 3 weeks, but everyone I talk to has a different value prop. What does it mean really to have to add value to a company, or do you think we're just there for the money and basically they can do their stuff on their own?
Look, there are entrepreneurs out there who are doing it a second, a third time that are running very much on their own,
Hmm.
that primarily seek capital, and then maybe the occasional sparring on a big strategic left-right decision on product or an internationalization or the next funding round. That exists, but that's maybe only 10-20% of the market. So still 80% of the entrepreneurs we see out there and we work with, they seek a more active relationship to their investors. And as you say, every single VC and also angel probably even um, has a claim to being value additive, because that is the primary means of differentiating at all, where capital as such is commoditized. And the question is, in which dimension do they believe they are value additive, and is it just a claim on paper, or can it, let's say, be evidenced with the references from the portfolio founders and specific, let's say, use cases. Yeah. And in brief, for us at AENU, there are two things that we have really cultivated and productized in terms of value add. And the first one is access to operational experience. Yeah. And that means it's not only my brother and myself who founded 5 companies, sold to Google, also built a unicorn with Forto, but also venture partners, venture advisors like Lorenz Leuschner, Friederike Waldenfels, etc. So many experienced operators from scale-ups, sometimes even grown-ups, that we have in our community, and that have very specific functional expertise. It can be on people culture, it can be on how to build an enterprise sales organization, it can be on post-merger integration and M&A strategies, it can be on internationalization, it can be on complex financing, interplay of debt, equity, project finance, and so on. So basically, as the company needs it, we make it available, and it's coming firsthand from the practical experience. So this is the one thing that we cultivate, that we productize. And the other thing is B2B access. That means when we typically come in at seed, sometimes pre-seed, 90% of what we do is B2B. The big question is always, who are the first brand name customers, the brand name logos that will endorse you, and where you get maybe a design partnership, proof of concept, or even the first real recurring revenue customers. And that is where we come in with typically C-level or sometimes even owner level contacts to lend our brand and our credibility to the company that is only in place for 6 months, for 12 months, in order to convince those brand name enterprises to work with the company. And you crack the nut, the chicken and egg of, okay, who are your references? Okay, you have none, I'm not interested to talk, etc. This is what you need to break in these early days. So B2B access next to access to operational know-how, those are the two elements that we have really been cultivating at the firm.
Look, we're running out of time. I'd like to just get a little bit of your perspective on what it takes to build a company. As you said, you've founded 5 companies. You've been through the up and down of everything. What are some of your pro tips? You're 43 years old, I believe.
Yes.
43 years old, been through the journey. What is a pro tip to keep going and make sure that you remain healthy and, mentally able to continue the journey?
Um, I think the biggest mistake I made, and repeatedly so, right? I mean, I started the first business 25 years ago when I was 19, was to get too deep caught up in operations and day to day, and blending the CEO role with the COO role, yeah,
Hmm.
and losing sight of the big picture, and also not allowing myself to step back from the daily operations every now and then in terms of a retreat, like silently going on your own and really trying to get back to 40,000 foot cruise altitude, and not today's meeting, tomorrow's customer, yada, yada, yada. Yeah. And for me, let's say the instruments to stay mentally and physically healthy, and also to be able to take this big picture view from time to time more effectively is basically around routines. Every event is not helpful. It may be entertaining and whatnot, yeah. But the routines are what really, let's say, drive fundamental change. And I think the aspects every founder should consider is starting with the basics like nutrition. Yeah, I personally eat mostly vegetarian since 7 years. It was yes, climate footprint played a role, but also health aspects played a role, and karma, or the question, to which degree do I want to be entangled in the practices of industrial animal farming, and I don't want to be entangled with that. Yeah, because I believe in the concept of karma, played a role. Yeah. So nutrition, and that has, for me, much more release of energy throughout the day. I'm not tired after lunch. It pays in if you eat light, or if you eat more vegetarian. It certainly pays in on your energy graph.
Mhm.
Sleep, super important. Aura ring, Apple Watch, you name it. Yeah. Aiming for these at least 60, 80 minutes of deep sleep as a key KPI. Also, heart rate variability is something many people are increasingly looking to as an important proxy of your of energy management, and ability of your body to adapt to changes. And um, super important. So getting, in my case, trying to get an average of at least 7 hours of sleep is what I optimize for, even if it means not going out, not taking this opportunity or invitation, or not doing the first meeting always at 8, and so on. Yeah. And then for me, big game changers, or the probably single biggest game changer was actually going deep on meditation. First on a more, let's say, agnostic kind of, calm headspace type, but then into traditional Japanese Zen Buddhism, where I also go to a monastery like for a week every year and practice daily between 30 to 45 minutes. So it is a commitment, it's a time investment. But for me, it has been the single biggest positive change in my life of the past 6, 7 years in terms of the overall peace of mind while being constantly under pressure and carrying a lot of responsibility, but also elevated level of joy and happiness, compassion, and I can only recommend. But even for those who are not open to exploring a spiritual way like Zen, I would certainly recommend to take 5 to 10 minutes for classical plain breath work. Yeah? Apps like Regulate, for example, because it has very positive influence on your ability to have a deep and short and deep rest in your day, to increase focus, to increase flow of energy, and it is accessible everywhere. Meditation, if you really want to, let's say, invest deeply and follow a spiritual path, but otherwise breath work, I think it should be mandatory for every white collar desk worker and entrepreneur out there. And then lastly, I developed a very like a daily 30-minute at least up to 90-minute sports routine. Surfing is my big passion. The feeling the energy
share that
of the
with you.
ocean is the greatest thing for me. Unfortunately, I cannot surf every day
Yeah.
for business, family, but also weather condition reasons. And so what I do is a mix of yoga, jogging, swimming, body weight workout to just stay physically in shape for the demands of the business, but also to be ready to catch waves in good conditions whenever they present.
For sure. And it's funny because as I'm listening to you, I'm a little bit younger than you are. I wonder how the Fabian from 20 years old to 30 years old would have reacted to that approach of developing these routines. But anyway, I hope it resonates with some people. Look, two last questions for you. The first one is, what's the last word that we leave people with today? Is there something you want to share as a message? What's a key message?
My key message is that in the spite of all the changing macro difficult environment today, it is still worthy to pursue trying to build a positive legacy as an entrepreneur and as a human.
I love that. And then next question for you is, who should be in your seats next time? Who's like a climate tech investor that you respect?
David Helgason
From
Transition.
Transition. Okay. Love that. Well, listeners, I hope you enjoyed this episode. If you did, do remember to like, comment, and subscribe if you're on YouTube, or to give us a follow and a 5-star review on Apple Podcasts and Spotify so that we can keep interviewing great people like Fabian. Thank you so much, Fabian.
Merci, Hugo.
My
pleasure.